Good morning. This is Steve Dimengo and Rich Fry to commence this webinar. And I'm with, again, my associate, Rich Fry. And we have a very extensive state and local tax practice experience and with significant emphasis on Ohio taxation. And the majority of our practice is sales and use tax, handling many audits, voluntary disclosures, appeals, administrative appeals with the tax commissioner, all the way through core litigation with the Ohio Board of Tax Appeals, Court of Appeals, and the Ohio Supreme Court. And my background is, for the last 25 years, I've ate, breathed, and lived state and local tax. And consistent with that, I've been the chair of the Ohio State Bar Association Sales and Use Tax Subcommittee for the last 16 years, teaching the Masters in Tax State and Local Tax course for the last 20 years. Tons of speaking and writing, and we have a very good rapport with the key state officials and auditors and managers and so forth. And Rich is pretty much complementing my practice, following in the same footsteps. And Rich, I don't know if you want to talk about your practice.
Yeah, just obviously not as experienced as Steve, but I graduated from the University of Akron 3 years ago with a law degree and Masters of Taxation, and I've been working with Steve since then. And been involved in use tax audits, voluntary disclosures, and appeals as well.
And so we're here to talk for the next 30 minutes about significant Ohio use tax developments. And the timing of this webinar couldn't be any better based upon some budget bill provisions that are pending that Rich is going to talk about. And Rich is going to lead us off now.
Okay. When we originally scheduled this webinar, we thought the use tax education program was going to be the big topic, but it sounds like in a week or so it might not be the case. But it is the current program that's going on right now, so we'll at least mention it. This was announced in January, and kind of the first phase was the department was working to educate the public on use tax, and that would go from January through August, and then August 1st or thereabouts, the department was going to start sending out letters offering taxpayers the ability to settle their use tax liability going back 4 years and waiving penalties. You could act before being contacted by the department through the voluntary disclosure program and further limit that to 3 years. And then after that, if you didn't respond to their letters, they could commence an audit and go back 7 years and impose the full penalties.
And I just want to interject at this time, Rich, that use tax has existed for a very, very long time, before many years before any of us were born, and it just hasn't been something that the state has actively reminded everybody of its existence, other than through the course of an audit. And the reason that, and everybody has a use tax liability, is just that it's hard to comply with because there's not a natural other tax base to leverage off of, like the income tax. We can leverage off the federal income tax base and other areas of taxation where there's already a set model that you can leverage off of. Use tax is an independent tax determination that everybody is expected to comply with, but the reality is nobody has.
All right, so about 2 weeks ago, the Ohio Senate approved the budget bill, and there were two interesting provisions that were added. The first one is a limitation on the look-back period such that the Department of Taxation cannot assess consumer use tax that's due prior to January 1st, 2008. And that's in any case through an audit or otherwise. And then the second provision mandated a use tax amnesty program, and that would allow taxpayers to come forward and resolve their entire liability by paying only the tax due on or after January 1st, 2010. And they would waive all interest and penalties, and all taxpayers would be able to take advantage of this program unless an assessment was issued prior to the effective date of the statute, which is expected to be 90 days after it's passed. And also that the department would have to offer a 24-month payment plan to allow you to pay your use tax during that period. So what effect would these provisions have on the use tax education program if they are in the final budget bill? And I will say The budget bill has to be passed by the end of June, so we're going to know here in about a week what these final provisions are actually going to say. But assuming they're included, it will effectively end the enforcement component of the use tax education program. Because if the department can't assess any taxes after January 1st, 2008, and they have to offer taxpayers the ability to resolve their entire liability for all taxes after January 1st, 2010, there's really no point in sending out letters that, offering a 4-year look-back period. The department, according to our sources, will continue their educational aspect of the program, and we know that they have spoke to many trade associations and other organizations just trying to get the word out. But they will no longer have the threat of going back 7 years for unregistered businesses.
Okay, and just kind of stepping back, reading these provisions, it's incredible what the state is proposing, the General Assembly is proposing. It's a tremendous, tremendous windfall for businesses that are even currently being audited. And I just spent a few minutes the other day going through files that I have, pending files with respect to companies that are currently being audited. And the reality is that companies that are currently being audited, for the most part, covers periods before 2010. And a lot of these audits might have been concluded 6 months ago, but they still haven't been assessed. And we're talking hundreds of thousands of dollars in some of these audits that is going to go away, assuming that the state follows through with its informal guidance that if these provisions do pass, they will not issue an assessment. So hundreds of thousands of dollars just in these 9 audits that I've been involved in, and actually a couple are actually a few $1 million in liability that pertains to pre-2010 periods. And on the flip side, there's a lot of businesses that we're involved in. Rich and I have pending appeals that have been assessed as late as May, where we had to file petitions for reassessment, and they're not excused, and those are a few $1 million. So this provision has us scratching our head. It's obviously pro-taxpayer, obviously pro-business, and what a tremendous windfall for those businesses that aren't going to have to pay this liability. So looking at it now with respect to current audits, we understand the state will focus its attention on auditing sellers for the sales tax that should have been collected and not focus on the customers. With respect to some more, what happens if, what planning you might want to do with respect to this, obviously to the extent you can, in your current audits, to the extent you can persuade them if it's not clear to delay issuing the assessment, that's what you want to do. You want to have some communication and perhaps even lock them in that you can rely upon that they're not going to issue the assessment. And then you can, if the provisions remain the same as they are now, you won't even have to pay when if you want to deal with your liability, it would only be a liability that arises as of January 1st, 2010 going forward, and that liability won't have to be paid until April 30th, 2013. But if it's enacted the way that it's currently drafted, you still may want to register and start complying with your use tax obligation so that you don't have to pay a big liability 2 years later, and you'd have to pay the interest at that time also. Actually, you wouldn't have to pay the interest. You'd have to pay the interest if you elected to defer it over a 24-month period. So if you want to take advantage of the time value of money, then you would defer making any payment until April 30th of 2013. But we would suggest that you start thinking about compliance and registering and just dealing with that tax liability now. And if it doesn't pass, then it goes back to the same set of rules that we were operating under for the last few months, and that is try to do a voluntary disclosure to limit your look-back period for the preceding 36 months. So from this point forward, what we're going to do for the balance of this presentation is really talk about give you a little bit of primer as to use tax. Rich is going to talk about the nature of the use tax, and then I'm going to talk about things that you might think about as to how you minimize your liability in the past, or identify areas where you may not have a liability where you thought you did, and talk about what you might do in the future to take advantage of some exemptions or exceptions from tax.
And just a quick note, if you guys have questions, go ahead and type them into Ryan at Intuitive Marketing, and he can filter them to us. Although we will caution, we're going to put this on our blog, so any questions should not be specific facts, and they're going to be available to the public. Okay, so a couple of just use tax basics. The use tax is imposed upon the storage, use, or consumption of tangible personal property or services in Ohio. It's a complement to the sales tax. Essentially, you get a credit for any sales tax that you pay on property. So when you go to Best Buy and buy a CD, technically you would owe use tax when you get in your car and put the CD in your car and start listening to it. But because Best Buy collected tax on the purchase, you would not owe that use tax anymore.